Wagwan, my people, and welcome to yet another day. Today being on Wednesday, 26th of November, 2025. And let's basically begin by looking at what we anticipate in the Forex Factory calendar today in terms of economic data. So today we are only looking at the 4:30 news, that is the unemployment claims today. And tomorrow will be bank holiday because tomorrow is bank holiday in the US. That's what they call Thanksgiving, right? So there will be a Thanksgiving day in the US. How I wish we also have a Thanksgiving day, because anyway, from January up to this point that we are in, it has taken the hand of the Lord for us to be here. So we thank God for that. So in terms of what happened yesterday, we saw the inflation core PPI 0.1%, the PPI 0.3%, right? And when you look at this kind of a data, it's kind of increasing the odds of a Fed rate cut. Okay, so because what we are really talking about, because if you look at the prices of gold right now, gold is trading at 4160, around 4163. So we saw the price of gold really push high during the fundamentals yesterday, and when you look at these, it's actually about. Let me go on the weekly time frame, and yeah, it has already taken out. I think by yesterday it had already taken out the high of yesterday, right? It had already taken out the high of yesterday, and what we are seeing in terms of the data, we see the conference board confidence plunged to 88.7%, which basically highlights concerns of a job, income, as well as stability, right? So again, when you look at now the market pricing, the odds for a December rate cut, they are about 82%. That December we will have 25 basis point cut. So, but when we look at, let me maybe probably look at next month. I know they have not really yet given some projections for next month, so we still have. It will be on December 10th, Wednesday. That's when we'll be having the FOMC, and so that's the odds at the moment, 82%. But remember, we still have. I think let me go to next month still, because which should come first? I think the FOMC will come later, because FOMC is on 16th. FOMC will come first, that is on Wednesday 10th, and then now on Tuesday 16th we will be having the NFP. Okay, we'll be having the NFP. So high chances it's that we might be able to see a rate cut. 82% chances of a rate cut. I think the only data that is pending this month, I think, is the CPI should come out. We should see the CPI, the US CPI. Yeah, I think there'll be no CPI data until let me see that. So here we don't have any CPI data, only the core PPI that came out. So if you look at December, this is the entire month of December. So yeah, I think right now, because CPI will not come before FOMC, therefore I really anticipate that 25 basis point cut. Okay, because why am I looking at this kind of data? Because this is the data that determines whether we are going to have rate cut or not. The Fed looks at the NFP, it looks at the inflation data, and that is the data that really insinuates whether you are going to have a rate cut or not. Okay, so Today we are looking at basically at the unemployment. Okay, so now if you look at maybe probably yesterday, we saw yesterday yeah, gold was able to push up, then we saw a retracement, but today we are seeing a price pushing higher, so we anticipate to see that bullish sentiment or bullish momentum there. And one of the things that I can say is that the yesterday's data basically augmented speculation of a rare rate cut by the Federal Reserve, and that's why we are talking about 25 basis point cut, 82% chances or odds of a rate cut come the December 9th 10th meeting, right? Again, if you look at the U.S. Treasuries, because we have always discussed this idea of correlation. So if you look at the U.S. Treasury yields, they are falling, and also if you look at the dollar index, which you're going to look at in a few, it's also pushing on the downside. Right now, it's trading about 99.70%, and this again keeps elevating the prices of gold, because when the U.S. Treasury yields are falling, when the dollar is weak, then the prices of gold tends to really push higher. All right. So so what now we can look at now technically, what we are seeing here technically, this is the level that we have been waiting for the price to rebound to break, because this has been a bullish peanut. All right. So I think for me, I'll be looking at how the price is going to break these particular peanut, right? So let me use this, because I have really drawn a lot there. So let's mark this. It's easier for us. Very clean chart. Okay, so we have that. We have that, and then we have this. So this has been the bullish peanut that we are looking at, the price breaking above that, because being a bullish peanut, of course, we are waiting. Being a bullish peanut, what it means is that price is likely to break on the upper direction, and the reason why we are looking at the bearish sentiment. So again, factoring the fundamentals, what's happening in the fundamentals, a weaker dollar, falling treasury, U.S. Treasury yields, and the 82% chances of a 25 basis point cut come in the December meeting by the Fed. Therefore, this is likely to elevate the prices of gold. So when you come on the 4-hour time frame, then this is the structure that we have, and this is why I begin marking my zones. I trade the ICTs, so we have it there. But before even we have it there, remember what we had mentioned. The price giving us this kind of a pattern, that one, and then that, and then now we see the price go up. So what happened is that the price came to retest this breaker, right? I mean, these neckline. So these are double bottom. The price came to retest this level here, and now we are seeing price pushing up. So with this kind of a pattern, then we might be eyeballing these levels where we have the all-time highs. All right, that's where we have the all-time highs. That is looking at it from the daily, right, from the daily time frame. But of course, before we get to that, we have these liquidity levels there around 42.51. So if prices of gold is able to claim above 42.51, then the next levels we'll be talking about is the all-time highs. Okay, so this is the buy side liquidity, the BSL, right? And also we have some buy side liquidities here as well, buy side liquidity, where we have the all-time high. So that is the structure that we have here on the daily time frame. Okay, so when we come to the 4-hour time frame, therefore, I'll be projecting in terms of buying opportunities. Look at this daily time frame, really also giving us some cues of the price likely to come to this level. Okay, why am I saying that? Because also here we had looked at this pattern here. We had another double bottom there, like that. And now what we have, we had a confluence. We have a confluence here. Let me minimize, let me mark these clearly. So we have that confluence here, whereby these price is coming on this particular trend line, and here, because this is the first bottom, this is the second bottom, and this is the neckline where we see the price reacting from. All right, so where the price came and reacted from, we have that bullish engulfing, and this bearish engulfing, it has been broken and the price has come to retest. Therefore, we expect to see more higher prices. Okay, so but nevertheless, looking at it here, this is a level that we were anticipating for this pullback. We were looking at the price coming to this particular point. Why? Because the price has already created that BOS there, and therefore this was a probable order block. So it still remains an order block because it has not been tested. Right. So what the price did, it came and retested this particular failed bearish engulfing. All right, not even really failed because it was tested here and the price pushed down, but now it came and broke above that, and therefore retested it, and now what we are seeing is the price pushing higher. Right, what you are seeing here is the price pushing higher. So let's do away with that. How high can it be able to go? We have this 4-hour OB. Okay, we have that 4-hour OB because we have these BOS there. So this is an order block. You know how to validate high probability order block. We also have a neckline here. I mean, we also have this trend line here. So what I'm looking at again, here we have another structure, right? We have another structure. Here we have another BOS. So what does that mean? That this particular level here, it's a good order block to also consider. Now let's push to the 1-hour time frame so that we can be able to refine our zone. So we have it there, right, on the 1-hour time frame. We have these there. Then we push down to the 30 minutes time frame. So on the 30 minutes time frame, this one comes to this point, and this one still remains there because this is the 1-hour OB. So then we go to the 15 minutes, and on the 15 minutes time frame, we have it there, and these are the one we have it there. So these are the levels I'll be looking at in terms of buying gold. So here I'll be looking at in case the price comes back to these levels now. So when we come on the 15 minutes time frame, what we are able to see is that the price came to this level, pushed up, created a BOS there, came back to this particular zone, and the price pushed up again. So also here we see the price creating this another BOS, right? So and also taking out these liquidities, and then it is coming again to this order block and pushing higher. So the reason I'm saying this level, we can even streamline it to that particular point, because here we have the BOS, right? But we know the price of gold, gold sometimes likes to draw wicks. Like you can see in this level how it gives these particular wicks. So to be on the safer side, I would consider that, because it's also rhyming around this particular level. So I'll consider that being a level that maybe can give some buying opportunities, right? So again, when you look at these 15 minutes time frame, therefore we will then anticipate the prices of gold to come to this particular point, right? Because that's where we have an OB on the 15 minutes time frame. If you look at it on the 1-hour time frame, the 1-hour time frame OB begins at this particular point, which is quite a bigger one there. All right, it's quite a bigger one here, a bigger level, because if you consider the entire of that zone, it's about 200 and something, 232 pips, so quite big. So the reason why I'm going on either 15 minutes time frame or 30 minutes time frame, for me I usually work with the 15 minutes time frame, and here it's basically looking for entries, right? Looking for some selling opportunities, because this will happen, all right, once you see the price break above this particular point, because this is the neckline, that this is the trend line on the 4-hour time frame and the daily, that we are expecting the price to break. Because on the downside it's respected let me go to the 4-hour time frame or the daily again so that you can see what I'm talking about. So what I'm talking about is my anticipation is for the price to break above this trend line, and then now we see some bullish trajectory. So the price is likely to come to this level. We have an order block. We might see a potential selling opportunities there. And after that, in case this OB is taken out, we have the buy side liquidities, right? So that's my projection, and that's what I'm looking at. So in case the price retraces to these levels, then these are some points to look at buying opportunities. These are the levels to load some buying opportunities or to hunt for buying opportunities. And in case it breaks below this point all the way down, then we look for selling opportunities all the way down to this particular level where we have again the trend line, and then we'll be looking for some buying opportunity. Remember, the price has been consolidating within this wedge. So we either see the price break above, which is the high chances because these are bullish peanut, or in case it continues to consolidate, because it can also retest this and continue consolidating within that particular level until when you are going to see the breakout. And we are anticipating higher chances a bullish breakout, right? So even today, as we look for trading opportunities, it's good to align ourselves on buying opportunities, right? On buying opportunities, not unless the trend changes otherwise. But for me, I'll be aligned so much on the buying opportunity, guided by the fundamentals, what the macros are saying, right? Because we are looking at 82% odds of a Fed rate cut. This is undermining the dollar index, right? So we can look at the dollar index. You can see the dollar index has been really bearish. So remember, we had talked about this dollar index. So we saw the price consolidate here, and then finally we saw the price, like we had said, the first scenario was the price to push on the downside because it has really rejected several times around this particular level here. So therefore, we see that other rejection. So is the price likely to come to? We are looking at the price coming to this particular zone, which will going to direct us in terms of where next. But I see a potential of even more bearish sentiment because the odds of 82% odds of a Fed rate cut, that might really undermine the dollar index. And we see a very weak dollar index. The falling yields, the US falling, US Treasury yields, which are falling also. So that makes me feel that although we are targeting the price to come here, it's a level, yes, to watch, but higher chances that we might see the price also break below this zone and continue pushing lower, right? And continue pushing lower. So let's monitor that and see. So for gold, align yourself in terms of buying opportunities. So look for those dips and, of course, aligning yourself with the confluences so that now you can be able to look at some high probability trade setup. All right. So with that, ladies and gentlemen, have yourself a good day ahead, and remember to stay focused, to stay disciplined, and to always trade with purpose. Right. So thank you, and have a nice day ahead.